Hello everyone, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks for you. So all you have to do is just watching this video and decide if Tesla could be something for your portfolio. I used the growth investing analysis to give you an idea about Tesla. So please feel free to hit the subscribe button below to become part of the Monkey Stock Club family and never miss a video again. At the end, please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless, I love to analyze stocks. So let's stick around and discuss it now. Let's talk about Tesla. Everybody says, or a lot of people says out there that Tesla is still a high growth stock. So I try to use my high growth investing analysis with the 6 KPIs here below, which could indicate if we are talking about an high growth investing stock. So let's start it with the enterprise value. This gives us or it's a measure of the value of a company regardless of its financing. So if you divided the enterprise value, which is the market capitalization minus the cash plus the debit, we came up with around about 400 billion US dollar divided by the revenue, 25 million US dollar. We got the value of 15.59, so we are above 12, so 0 points, unfortunately. Next one is the gross margin, is the percentage of sales that remains with the company after reducing the value by direct production costs. So here you can see also the formula, the sales minus the direct cost divided by the sales. You got the gross margin, and provides you a good indication of the profitability of a business model. So the higher the percentage of the more money a company has available for other activities like sales, marketing, research and development. We came up with around about 20%. Unfortunately, 0 points as we are below 50%. Next one, the rule of 40, a very nice and simple key figure for assessing the efficiency of a company growth and the quality of its business model. So the ratio calculates as the sum of the sales growth rate and the free cash flow margin. And the higher the value, the better the business model of the company is. So everything above 40 could be attractive for us. Unfortunately, Tesla has 6.18%, so we are below 40, 0 points, unfortunately. The sales growth rate was, compared to the last 12 months, unfortunately just 3%. The free cash flow margin 3.11%, so in total 6%. The sales growth, yeah, as I mentioned before, 3%. As we compare it within the last 4 years, I just screenshotted here the overall picture of the revenue and the earnings per share and the earnings in general. So we got quite a nice development in terms of the revenue. After a dip from 16 to 17 for the earnings, we see an increase within the last 2 years. But unfortunately, if we take a look into the sales growth TTM currently, we have just 3%. So This is below 20%, so unfortunately 0 points. And the next one, the debit ratio. The debit ratio is calculated by dividing the sum of the current liabilities by equity. So here we use the quarterly figures, and in debit ratio less than 1 indicates low debit, and this could be, or this is a good indication that they are not a huge risk in terms of the debit. So debit last quarter, 15,000 million. Equity last quarter, 11,000 million. So we came up at 1.37. So 1 point. Last but not least, the PEG, TTM. So the PEG is one of the most important key figure for the assessment of an already profitable growth stock. So it calculates the ratio of the price per earnings and the profit growth. So if the ratio is between 0 and 1, as Peter Lynch says, if we have the same PE compared to the profit growth, it's a good time to invest, as we are talking about in fair value. So everything below 1 could indicate an undervaluation. So the PEG can only be calculated if, let's say the company is already sustainably profitable. So here we have 1.15. The PE, TTM 809, as you can see here in the summary of Tesla's overview here, 809 divided by a very nice profit growth compared within the last 12 months. So if we compare it to current EPS in value above 0, and if we compare it to the last 12 months, we had minus 0.9 EPS. So we have quite a very, very nice profit growth if we compare it to the last 12 months. Here below, also the sales growth development. Here we can see also a bigger decrease of sales growth between 18 and 19. And as I mentioned before, if we take a look into the sales growth within the last 12 months, we have currently 3%. So quite stable. And last but not least, let's take a look into the fair value. Overall, we can say, okay, we have just 3 points out of 18. So this is not the right figure. Sorry for that. It should be 3. We have 3 points, as we have 2 points for the PEG and 1 point for the debit ratio. And in addition to that, I would like to show you the fair value by Peter Lynch. So the closing price currently 418. If we would use the estimated EPS trend 3.27 for next fiscal year, multiply by the profit growth of 86, we would came up to a fair price of 284. So the profit growth, or let's say the future profit growth, is calculated by dividing the EPS 2021 by EPS 2020. So we got around about 86%. for 2021 as an estimation for the EPS trend. So minus 32 in general. To summarize it, is it a nice point of time to invest in Tesla? It's not easy to do an estimation, but from the fair value point of view by Peter Lynch, the fair price will be pendling between, let's say, 280 and something about 300. And in terms of the high growth investing analysis, as I mentioned before, 3 points out of 18, it's not really an indicator to have at least an high growth stock that we are talking about here. So yeah, that's it. To summarize it, I hope you enjoyed the video. Please feel free to hit the subscribe button below. I will keep you updated within the next weeks. So I will always release some new videos every week and show you some nice investment opportunities and also some overall analysis like the Tesla one here, to give you an impression about the current status, which could help you to make your decisions in terms of investing in Tesla stock, for example. So stay tuned, and we will hear each other again, hopefully. Thanks. Bye-bye.